The next startup on the show, it's been around for 8 years. It's EBITDA positive. It is Hopscotch that is in the business of selling clothes for children. Why are we getting Hopscotch's founder today? Because they've gone in for yet another fundraise. It's Series D, where you've seen a clutch of investors, both institutional and high net worth individuals participate. $25 million raised from large firms as well as the likes of Nisha Godrich, Facebook co-founder, and the co-founder of Skype. Here's Rahul now joining us, the founder of Hopscotch. Hi Rahul, congratulations, $25 million Series D fundraise. You were already EBITDA positive, I believe. Tell us about the investors first up.
For sure. Thank you very much for having us on the show. We are delighted as a company and have so much to be excited for. Yes, the fundraise comes through at an opportune time when Hopscotch has been growing close to 50% year on year, and we've turned EBITDA positive. Right, this is a huge achievement for Hopscotch and our team. Just about a year ago we were negative 30% EBITDA, and today we're getting close to 6 to 7% EBITDA, right? And so we expect the trend to continue and hopefully see double-digit profitability early next year.
I'm going to get to the numbers in just a bit, but do you want to take us through the investors that participated in this fundraise?
Sure. No, absolutely. This was a round that was extremely well subscribed. Our existing cap table of investors supported us. We had some notable institutions that include India Infoline, RPG Ventures, Rice Capital, Lion Rock Capital based out of Singapore, coupled with a very large and significant contribution from Eduardo Saverin, the co-founder of Facebook, who anchored the round and drove forward. Eduardo has continued to be a very strong supporter of the business from our early days. Along with him, we had Wei Yan, co-founder of Diapers.com, someone I had worked with before, Toivo Annis, and so we are extremely excited to close this round and move forward.
Nisha Godrich, she also participated, I believe.
Yes, Nisha's been an investor in the business from Series A onward, and so we're very happy to have her sort of continue to be around and provide us advice as we scale Hopscotch and build one of the greatest consumer brands in the country.
You said that you were, loss-making in the negative before this fundraise. So are you now EBITDA positive only because of this fundraise?
No. The fundraise has nothing to do with being EBITDA positive. These two things are completely independent events, and it's only a coincidence that they happen to take place simultaneously. The fundraise is an outcome of strong and successful momentum in the business, and so our investors supported us with this very generous investment. And in parallel, we've been making strong and meaningful investments in the business to become lean, to deepen our relationship with customers, to invest in technology. And as a result of many of these things coming together, from strengthening our brand to the technology working out for us, we've become a extremely profitable business, and we're growing really fast at the same time.
Hopscotch has now been around for 8 years. Can I ask you how big Hopscotch is? What is your valuation? What kind of revenues you're clocking in? When you talk about the 6 to 7% positive EBITDA, what kind of a number are we talking about?
Yeah, no, absolutely. So look, we are a business that is, we're a privately owned company, and so we're not at liberty to disclose too much given the interest of our investors. But we are doing about north of 400 crores in revenue. Next year, we expect to grow another 50%, right? And so we should be north of 600 crores next year. we've averaged about 6 to 7% EBITDA profitability for the last 4 to 5 months, and the margin continues to increase with every passing month.
You achieved EBITDA positivity, not just coinciding with the fundraise, but also with COVID-19 and lockdown. How did that happen? Did you take some measures that got you that, or you just saw higher volumes? Like, what was it?
Yeah, I think like most businesses in the country, we were adversely hit with COVID-19. We were early adopters of work from home. We instituted work from home well before the country got locked down in the month of March towards the end of the first week. And so we sort of embraced some of the changes that were needed to protect our teams from getting infected on their way to and from work. And since we're an organization comprised of very attractive entrepreneurs who love their craft, we were able to sort of continue to make forward momentum through the lockdown. For the first month of April, shortly after the lockdown, we tried to turn our attention to sell a lot of safety essentials, which included face shields for kids, KN95 masks, and clinical thermometers, and we did quite a thumping business in the month of April and May, and then starting early May, we launched Kids Essentials. We noticed that a lot of our moms weren't able to access kids' wipes, oils, lotions, washes, and other personal care products. And so we broadened from safety essentials to personal care and food products for our consumers. And then when the restrictions were lifted, all hell broke loose. We saw a lot of pent-up demand for those first 30 days. And if I just give you some numbers, sales of just casual dresses that kids wear at home jumped about 40% in July relative to pre-COVID levels, whereas things like party and formal wear dropped by about 20% pre and post-COVID. And so you're seeing a very strong surge in online demand across categories. The ones that involve going to birthday parties and celebrating, I think those categories definitely have seen some contraction, but it's been more than compensated by the strong online traction that we continue to gain.
So I want to ask you another question, at a time, and I understand, where people don't like to cut back on spending, it is on their children. For all aspects of the spend on the children, whether education, of course, is completely necessary, but they do like to indulge their kids. So having said that, though, have you noticed if, let's say, the average billing size is down during COVID-19, because a lot of your consumers, they may be taking less salary, their businesses have been hit, like discretionary spend is down?
Yeah, no, it's a great question. We were extremely anxious, as you might imagine. We're a kids fashion brand. We're focused on fashion for a reason, and we're expanding into other lifestyle categories. And so on one hand, COVID-19 catalyzed our motivation to enter other categories in the lifestyle space. As I mentioned before, we went into some of the more premium personal care and food categories that we otherwise would have waited to do. But within fashion, right, which drives the lion's share of our revenue, we haven't seen any reduction in purchasing patterns. In fact, we're seeing very strong online adoption from first-time customers, and we're seeing sort of record levels like never before. Now, consequently, even though we're seeing a lot of growth in online business, our existing shoppers have become increasingly loyal during this time. And so we're seeing 85 to 90% of revenue continuing to be driven off repeat customers in the business. And so we continue to be cautiously optimistic. We're not seeing anyone cut back. If anything, the festivals are here. We just celebrated Raksha Bandhan last month, and Navratri, Dashera, Diwali will all be around the corner, and I think we're selling more merchandise than we had seen in previous years.
The other thing is, the Prime Minister's clarion call for vocal for local, Atmanirbhar Bharat, imports have taken a hit. How is that? What has that meant for the fashion, for the kids' fashion business? I don't know how much you relied on, let's say, imports coming in from China. Are you sourcing more from local vendors? Are you talking more to export houses who, couldn't ship their orders simply because borders had been sealed?
It's a good question. So overall, the majority of units that we sell are made in India, fortunately or not, right? When we began, that was not the case. About 8 years ago, 80+% of the units sold were from outside the country. Today, the lion's share is made in India. And I think we built Hopscotch because we saw consumers were unable to access great merchandise in the country, right? We have always been a country that has the finest of textile capabilities since pre-colonial India. And given this big gap that we saw in the market, we believed strongly in pursuing what is today our mission, right? To offer moms in India access to fashionable assortment at an affordable price point, right? And so, as we think about the PM's message, absolutely, we continue to focus and make definitive investments to produce and source more and more items from India. And I think we expect that the contribution of revenue from Indian manufactured goods has increased and will continue to increase in the foreseeable next half decade.
I want to now ask you, I've asked in a different way. I want to once again ask you, is there a trend that's moving away from premiumization? Has the demand, which you're saying is returning back to pre-COVID levels, more for essential clothing?
Sure. As a brand, Hopscotch sits at the sweet spot between aspiration and affordability, right? Because we're online, because we're able to distribute our products through the consumer internet. Shoppers across India, I think in over 1,500 cities and growing today, are able to access Hopscotch, right? And so as a result, 70% of our revenue is from tier 2 and smaller towns, right? And as we look at their pent-up demand, we don't see that it's skewing towards basics that people wear at home. In fact, we're seeing the opposite with the exposure that consumers in India have through Facebook, through Instagram, to fashion trends around the world. There is a lot of pent-up demand that consumers have for these items, right? The exposure people have to international celebrities and media has only increased demand. And so we're